Good morning, everybody. Good morning and happy Sunday. This is the pup. And before we get to my weekend review, which I will put out in a little bit, I've gotten a few inquiries from my pup charts, but also from my Our Trading Edge trading room. Um, how I knew about snow, why I put out the alert that I put out, and how I tackled the trade, and also what I see coming in the next week or two. So, yeah, it was really simple with snow. I mean, I say simple in a kind of tongue-in-cheek way because, trading is never simple, but it can be simplified. And really, that's been my goal with both my pup charts mentoring service as well as our trading edge. It's really to help you all in your trading journey, give you insights and to show you what works for me, and in the room what works for some of the other traders. The key to trading is really not to follow other people's ideas, but to look into those ideas and see if they match up to your trading style. And if you are still in the early part of your journey in terms of determining what your trading style is, then I think, learning these tips and these tricks can just be tools in your tool bag. I like to use that analogy because in trading, there is no right way or wrong way to trade. So having said that, let's talk a little bit about. So this is one of the alerts that I put out. So for those of you who aren't members of my pup charts, I do a lot of educational content, and I do, daily day and swing trades. Not all of my content is here on pup charts. It's more educational focused for the trading every day in and out, day trades, swing trades. That is going to be on my trading platform, our trading edge. But for pup charts, what I like to do is show a little bit of the techniques that I use, that I show in the educational videos. So, on Thursday we had a pretty choppy day. It was a wild ride. We had some pretty big lows, looked like we were selling off, and then we had a strong close into the end of the day. And so that was my first signal. So before we look at the chart, this is basically what I put out for those of you who are not subscribed to pup charts, to my technical analysis course. I just talk a little bit about what happened on Thursday going into Friday, but I said one chart that looks interesting is snow, right? And we'll take a look at the chart that I sent out in a minute. That's the link for the chart right there. And basically what I said is, snow has been struggling between 252 and 254 for quite some time. And so I knew that if we can clear this zone, at the very least we have an opportunity to get a pop. And that's exactly what happened. And I also said, again, bear in mind, this was sent out Friday morning before the market even opened. I believe this was sent out at around 8 a.m. Eastern Standard Time. So, as I said, if we clear that zone, 300 can come fast. And I said, look at my 2-hour Elliott wave chart. Again, we'll look at the chart in a second. But then I also had some day trades. Apple, I said 145 is a tough level. It hit 145, it went above, and then came right back down. I think I closed right around 145. So I'm going to be watching Apple into next week. Amazon, this worked as well, but Amazon did close down. And Tesla, we hit, I think, 658 and came right back down. So I think these two didn't trigger. This one, actually, I think all three of these did not trigger. But guess what did trigger? This bad boy right there. And so really the trade was a break of 251, and I was going to play the resistance into 254. And I played the 255 Cs for next week. So that's the 255 calls for next week. So the other thing you could have done is you could have taken a lotto trade for this week's 255 Cs. And man, that would have went, I don't even know, like 15x, maybe 20x. But we'll take a look. The reason why I did the 255 Cs is because I was going to play for a continuation. So the idea is, okay, I don't want to get killed on theta in terms of the premiums on a Friday lotto, because if you hit, let's say, 241 and then quickly the stock dumps, your contracts will be down like 50%, 50% really quickly. So by going out to next week's contracts, I protected some of the potential premium, because if we did get that false breakdown, and then let's say towards the end of the day we came right back and we closed at 254, then those 255s would be sitting, nice and pretty for a nice, hopefully Monday gap up and go. That's what I'm thinking, would have happened, given the way that I see snow trade. So let's take a quick look at the chart. Okay, so this was the 2-hour versus the weekly, and what that means is anything you see dotted like this on my charts, that's going to be the weekly time frame. And so this dotted white line you'll always see on my charts is the 21 weekly moving average. And what I've noticed for the 21 weekly moving average, and this goes for most stocks that I follow, you could see how it acts as resistance. You get a false breakout, breakdown, breakout, breakdown. When I see this, that gets me excited. So that was the first inkling to start really paying attention to snow. The second thing, I use a 2-hour time frame mainly for Elliott wave. And so I don't know if everybody's so familiar with Elliott wave, but with Elliott wave, you usually have an impulse wave 1 up, you have a 2 wave pullback, you have an impulse wave 3 up, you have generally a triangle in wave 4, and then you have your final wave 5, right? So you have wave 1, 2, 3, 4, and 5, okay? Wave 3 tends to be the longest wave, but never the shortest wave, and that's really important. So wave 3, if you have a nice consolidated wave 2, you generally get a violent wave 3 up, and then you'll get your 4-wave contraction, and then your final wave 5 move up. So I counted out this right here, right? So let me see if I can make this a little thinner so it can look a little better. So it looked to me like this was a 1, 2, 3, 4, 5. That's your wave 1. So with 5-wave moves, there's always going to be subwaves in each wave. So in your wave 1 up, there's always going to be a 1, 2, 3, 4, 5. And then your wave 2 pullback, you're usually going to get a 3-wave pullback, which is an ABC. So you have A, B, C. So right off the bat, I knew we were working with a 1, 2. The next thing I want to look for is, okay, well then in wave 3, you're also going to have a 5-wave move up, okay? So you're going to have a 1, 2, and what's always generally the longest wave? Wave 3, okay? So what am I waiting for? That explosion of that breakout. So that was another clue to me that said, all right, I think snow is ready to go. Now let's go to the live chart. So this is the daily chart that we're looking at right now. And so I want to show you that we had here a descending triangle, okay? And usually with a descending triangle, you're either going to get a breakout, right? Let me draw this out. You're either going to get, the contraction into the bottom of the triangle, and you're either going to have a breakout or a breakdown. So what am I seeing here? You did not fake me out. This fake breakdown right here, nice fake out, right? So we get that fake out, and then we start to move up. This is the wave 1, 2 that I was talking about on the 2-hour. What else am I seeing? I'm seeing a breakout of 50 on the RSI here, so that matches what I'm seeing. But what else am I seeing? I'm seeing a TTM squeeze setting up here into this move, which we broke out of on Friday, right? So RSI dipped below 50, almost like a retest of this RSI trend line, and then RSI popped back up, right? Another breakout. If I were to increase the size of this TTM box, it's a little harder to see, but you have a little bit of what I like to call a slingshot TTM squeeze setup. A slingshot TTM squeeze setup. And what that means is that momentum is shifting to the downside, but starting to shift back up to the 0 line, and then you get this squeeze firing. I think we're going to get the squeeze to fire to the upside, possibly Tuesday or Wednesday, maybe Monday. If we get a really big move Monday, then we're going to get that squeeze firing on Monday. But I think it's going to come possibly Tuesday or Wednesday. So anyway, let's go back to the chart. So everything looks great, right? False breakdown, breaks this descending triangle, get an RSI breakout, TTM squeeze is setting up. But what else am I seeing? Okay, so let's go now and look at the candles. Bear with me 1 second. Okay, first thing you see, massive bullish engulfing candle right here. And a bullish engulfing candle, what a bullish engulfing candle basically is, it's an outside bar. And so an outside bar meaning it opened below the previous day's low and closed above the previous day's low. That's a bullish engulfing. You could also have a bearish engulfing. Let's see if we can see any bearish engulfings here. Right here, bearish engulfing candle, right? Bearish engulfing. It opened, well, actually, the low of the day is lower than the previous low, high of the day higher than the previous high. What did that signal? A reversal to the downside. You get that nice push down, right? So now we have this bullish engulfing here. What does that signal? Not a reversal, but a move sometimes to the upside. So 254. Let's talk about 252 to 254, right? So you have this range of 252 to 254. And it comes back over here, right? So if I were to extend this 253 to 83 level, right? Let's see if we can get that 253, 83. You can see here you have a couple of wicks coming down, you get a little rejection there, you got a couple of wicks hitting this here for support, you get all these candles right here getting it as a rejection. So for me, that's a really key level. And then when you look at some of the daily candles here, you know, wick up, rejection, wick through, rejection, wick through, rejection, wick up, touch, wick up, touch, wick up, rejection. And for the previous day, wick up, rejection. So what's happening here is, I like to use the analogy of taking a sledgehammer to a wall, okay? Depending how strong you are, you know, you may hit that wall a few times before you even make a dent. So this is a sledgehammer to the 253, 254 wall. Sledgehammer, you made a dent. Sledgehammer, you made another dent. Sledgehammer, you made another dent. Another dent, now you're poking through, you're poking another hole, you still can't get through. So price pulls back. Now you're coming back in again, and now you've made an even bigger dent. So, you know, we're on the daily chart. That's why I like to go down to the lower time frames, because it gives you a little bit better sense of what's happening here, right? So you can see these wick throughs, wick throughs, wick throughs. But when you come into, let's say, let's see if I can find it here. You come into this level here, okay, and you get a sell-off, and it comes down to this level. And then it comes back into that tough level, and then you get another sell-off. Well, the one thing I noticed is the sellers are unable to push it down below this level. So this level here being 231. So here it got pushed down, but instead of going to 231, it went to 235. So the sellers don't have as much strength to push the price down, which means buyers are trying to take control, okay? And so what else do we see? If I anchor my VWAP, if I anchor my volume by price here, you can see with nice volume shelf. What do I like to play? Volume shelf breakouts, or what Jake from TrendSpider likes to call volume shelf launch pads. And that's exactly what we have. So now that we've understood the setup, that's what I was seeing. Let's see how it played out. So now what I would do is I would just go down to a 5-minute chart. And this is exactly how I played snow. So let me mark off where the opening day is. There's our opening day candle. Okay. Just get this a little higher. Okay, so I'm going to put it right to the previous candle just so we can see it. So the first thing I want you to note is we got the breakout, right, of our 253.50 level. Okay, and then our second candle, it wasn't an inside candle, but we hit our certain level and then we pulled back a little bit. And then we came down, but we didn't break the low of the day. It was almost like a double bottom. And then we came right back up to that level, got rejected, came back, couldn't break it, came back down, and then that second attempt right at 1035. And I can even show some volume. There we go. You can see that we had a nice volume open, and then volume started to taper off. Usually between 9:45 and 10:15, that's the pullback zone. That's when a stock is going to decide if it's going to continue up for the day, consolidate, or come down. So right here at 10, what is this? At 10:35, we get that breakout candle. A lot of ways we could have taken this trade. We could have taken the initial trade on the open and left a stop loss at low a day, or we could have taken the break of that, the second attempt to break that level, or we could have just said, all right, I want to play it ultra safe, so I'm going to take it over high a day, which was 256.67. 3 ways you could have taken this trade, but no matter which way you took it, you got paid. Because if you took the 255s on the break of 251, which was that initial break here, you're golden. If you took 254, which was the bigger breakout, you get a false breakout, you get that fake breakdown, and then you get it come right back up and then break out again. So no matter which way you took this trade, you got paid. A lot of the times when you take the trade too early and the price breaks down, people who have what I like to consider paper hands, they stop out of the trade right away. But that shouldn't allow you to not take the trade again. If you have confidence in the trade and in the trade setup, take the trade again. Maybe you took a 5% loss or a 10% loss, if you were playing options on that first trade. If you didn't take the trade again, then you would have missed out on a multi-hundred, maybe 1,000% runner. Okay, so that's the one thing you have to consider, especially when you're talking about a trade on Friday. So I had my next target level on snow here. Let me see, why isn't that showing? Oh, maybe it's on the bottom left. Okay, let's put it on the bottom right. Let's put this one on the bottom right. So my first target on breaking that 254 range was going to be 266. And we almost hit it to the penny. And then we started to flag here, right? So beautiful flag set up here. That was another opportunity to get in. So what I wound up doing, normally when I take trades like this, I start scaling out. My system of scaling out for options, I'll sell a quarter at 25%, I'll sell a quarter at 50%, a quarter at 75%, and then I'll leave the rest on as runners. Maybe I'll sell half of that quarter, an eighth at 100%, and I'll leave that last eighth on as runners. But what I saw with this strength of this move and this breakout, I wound up holding some of my contracts much longer. And the other reason I did that is because I was tracking the EMAs. And what you'll notice with the EMAs on this is once we break out that second time, it tracks this 8 EMA, this yellow line, all the way up into my first target level. So I was holding half of my contracts into this level. And then when I started to see it consolidate and break this, this 8 EMA, that's where I took the rest of the trade off. But I wasn't done there. I just I had this feeling a lot of times when you see these big, tech type stocks break out and consolidate and pull back, they tend to go again. So at this point, what I wound up doing is right at the break of this flag, I sold my 255 calls for next week, and I actually bought the 260 calls for this week. And by doing that, I was able to increase the gains percentage-wise on that second trade because I was playing same-day expirations. So this first trade went well over 100%. I want to say, I think my last exit was around 270% on those 250 call, or sorry, the 255 calls for this coming week. Okay, when I took the 260s here, just on this candle alone, these went like 300%. So what I wound up doing is on this breakout here, I sold my 260s, and with the profit that I made from the 255Cs and then the 260Cs for this week, I wound up starting looking at scaling into the next 3 weeks contracts. So on this move here, I still held some of my 260s. I think I sold 50% of my 260Cs here, and then I sold the rest somewhere over here. But what I wound up doing is I wound up buying the 270 calls for next week, the 280 calls for 2 weeks out, and then I bought the 300 calls for 3 weeks out. And so by doing that, number one, I only used profit. So between the 255C trade and the 260C trade for Friday's same-day expiration, I think I used a total of 30% of those profits, and I distributed those 30% into those 3 strikes over the next 3 weeks. And by doing that, I just wanted to spread out what snow may do. And so if we go back to the daily chart, the reason why I did that, go back to the daily first. The reason why I did that was because I feel that snow is going to have one of those explosive wave 3 moves. Now it may not, but I'm confident that it was, right? So if you go back to the screenshot to my, I said, if we clear the zone, 300 can come fast. So I took the 270s for next week, which I think is very, very doable. I think we hit, let's see, what did we close? We closed at 270. So those basically are in the money already. Then I took the 280s for 2 weeks out because here's the thing, like I know the next major level for snow is 275. What happens if Monday morning opens up and we gap over 275? If we gap over 275 on Monday, this thing could go to 300 on Monday. No kidding, right? Just because it made, a 30-point move on Friday doesn't necessarily mean it can't continue to do another 30-point move on Monday. So it may happen Monday or Tuesday or Wednesday. But that's why I staggered out my contracts over 3 weeks, because if we hit 275, let's say we don't gap up on Monday, let's say it runs to 275 and gets rejected, it can potentially come right back down to 254 and retest that hard level. So, that's the risk that I'm taking. But by buying more time on those 2 week out and 3 week out contracts, if we do get that retest, right? Let's say we get that retest of that 254 level, and then we bounce up, that might take a week right there. So my 270 calls would be in trouble, but I would probably stop out of my 270 calls at under 266. The 280s and the 300s, I might leave them on. If they get below 50%, maybe I'll close those out and I'll buy the retest of 245. I'm sorry, 254. But we'll play it as it comes. Regardless, even if those contracts, the 270s, the 280s, and the 300s go to zero, all I would have lost is 25% of the profits I made on Friday's trade. That is so important because that allows me to endure the pullback. Now, if you didn't take this trade at all, and you Monday morning you buy those 270 calls or those those 280 calls or those 300 calls, and snow comes right back down and then potentially breaks down, well, that's not a good trade for you, right? Because you're playing with too much risk without using the profit. This is where you can really make a lot of money, is by rolling your profits, portions of your profits, whether it be 25% or 50% of your profits. You want to take those profits and roll them into a stock that has momentum. And again, going back to Elliott wave, wave threes tend to be big and explosive when you get nice consolidations in wave twos. So that was basically what I was seeing with Snow, how I traded it, both from a breakout perspective, but also from an options perspective. Hopefully that brings some clarity to those of you who had questions on that. If you have any further questions about, the techniques I use, the time frames I use, the process I use, that's what I'm here for. Feel free to ask questions. There were other things that I was looking for, volume, Fibonacci pullbacks, Fibonacci extensions. We're already at 25 minutes. I mean, I can go on and on and on about this trade. We're on a 2-hour time frame, right? Look at the volume, the above average volume for, not the last 2-hour candle, but the 3 previous candles. I mean, there's just so many markers on this trade that really just got me excited and allowed me to do, what I did. So feel free to ask me any questions. Hopefully I can bring you some more breakout crazy trades like this in the future. I will say that, yes, I did see this happening. Yes, I was not surprised by the breadth of the move that it made. But, it just goes to show sometimes you just have to be patient and wait for these types of stocks to hit those key levels and wait for them to explode. Another one is Amazon. Amazon's been consolidating for almost a year, and it's finally breaking out of its consolidation zone. So really keep an eye on Amazon, because Amazon's one of those things that, it's one of those stocks that really can move. When it starts to move, it explodes. And then I'll leave you with this. 2 things. Number 1, Jeff Bezos stepped down this week. Number 2, watch out for a stock split on Amazon. There's been rumors flying around about it. They're just rumors. But now that Bezos has stepped down and he's turned over the reins to a new CEO, I would not be surprised to see them do some kind of split, whether it be a 10-to-1, right? Because their stock is at around, 2,500, 2,600, whatever it is. Let's take a quick look at Amazon. So I know it's actually in the 3,000s. What am I talking about? AMZN. So they hit 37.58. So if they did a 10-to-1 split, it would bring it down to $375. Would not be surprised to see that happen. And if you look at what happened to Apple when they split, Nvidia when they announced their split, Tesla when they announced their split, man, those stocks rocketed. So just putting that out there, not saying go out and buy Amazon today. It does look really good, but beware of that stock split news. I feel like that possibly could happen this year. So if that happens, Amazon to the moon. All right, leave you out there. Appreciate your support. Thank you very much for your questions. If you do have questions, I'm happy to do these trade review videos to give you a little more insight in terms of how I trade and how I take these trades. So have a wonderful rest of your Sunday. I'll come out with the weekend review video shortly, and let's trade them safe next week.